Hi, this is Jeffrey Kerr at Kerr Financial Group. Today is Monday, August 5, 2024. And, last week I made mention that the stock markets in the US were very fragile due to a lot of factors. And this morning we're seeing, a lot of this weakness come to fruition. And it's not only in the US now, it's across the world. Japan had one of the worst days ever. South Korea was down, I think, 9%. And I saw a blurb that they stopped taking sell orders in South Korea. I've not confirmed that, but it just goes on. Just it's a point that a lot of weakness across the capital markets and specifically the stock markets. Here in the U.S. this morning, for the first time ever, the Nasdaq was down over 1,000 points. We have come back. So this weakness and these challenges to the U.S. stock market, I believe are going to continue. This is not, I don't think, a time where it's going to be buying the dip and like that. Now, there is chatter about an emergency Fed interest rate cut. First of all, it started out as 50 basis points in September, and even this morning, it's now okay. We got to do an intra-meeting emergency cut. That I think is going to send a bad signal, and I've got some ideas on how to react to that if they do it. I don't think that it would be helpful to the stock markets, but I think there'll be some sectors that are going to perform well. Let us know if we can help you, if you want to have a conversation about that. Some of the things I think that are causing this is, the job data last week, and I said I was going to do it in more detail, just don't have the time today. But the jobs data for July that was reported last Friday was pretty weak. And I think another thing that regarding the jobs reports, every month they report a number, and then 10 out of the last 12 or some high percentage of months, the next month is revised downward. And while the computers may not matter, at some point I think it becomes one of these things where the traders and funds and investors say, what are you trying to pull at me? Why are you giving us this? It seems to be made up data, and it kind of goes back to the government and the Fed telling us that inflation was transitory, and it clearly wasn't. So I'm wondering if that's part of what this adjustment is all about too. Clearly, geopolitical problems, the riots in the UK, war in the Middle East. It's a disaster. The crypto markets, imploding, and bond yields are falling. And I think this all points towards a higher probability of an economic slowdown. Again, the jobs market being weak, big layoff at Intel. There looks to be more layoffs and some slowing indicators. So be careful. If we can help, call us. There's ways to hedge. There's way to position defensively. I don't think this is just a quick bounce and another resumption of an uptrend. I think this is here to stay for a while, and you need to manage that and think about that properly. Not easy, but we'll be working on it too. Thank you for listening. Talk to you soon. Goodbye.